Swayam Prabha. Digital India. Educated India.
Yogah karmasu kaushalam.
Hello everyone, I am Dr. Chetna Marvadi, Associate Professor, School of Commerce, Gujarat University. Today, we are going to study next part in contract costing, which is part 3. Friends, we have acquired sufficient information about theoretical aspect of contract costing in part 1 and part 2. Part 2 of contract costing had dealt with number 1, how to deal with special plant and machinery. Number 2, direct expenses like architect fee, subcontract and their recording in accounts. Number 3, what are the indirect expenses and their related accounting treatments. Number 4, how to record when contract is completed. And number 5, what accounting treatments to be given at the end of the accounting year when the contract is uncompleted. Number 6, we have studied terminologies used in contract account. Number 7, we have studied format of contract account in case when contract is completed and in case when contract is incomplete, that is work in progress. Number 8, how to determine profit or loss of contract account. And number 9, disclosure of work in progress account in annual account. Let's start with part 3. Let's understand the learning objectives of this part. After having theoretical discussion, we will study some practical questions on number 1, when contract is completed, number 2, when contract is uncompleted. In uncompleted contract, first we will study when significant work is completed, that is less than 25% of contract price. Number 2, we will study when substantial work is completed, and number 3, when most of the work is completed and small part is remained left. Let's understand first when contract is completed. If contract undertaken has completed in the same accounting year in which it is commenced, the ascertainment of profit or loss on such contract presents no difficulty. It means determination of profit or loss is easy. Here, all direct and indirect costs are charged to contract. The contract price is credited to contract account by debiting contractee account. If any unused materials lying on a site is returned back to the store, and for this return of material, contract account is credited. Plant and machinery is also returned back to the store, and plant and machinery is also credited to contract account after reducing cost by charging applicable depreciation at written down value. Now let's understand case of contract completed through illustration. Let's understand illustration 1. It is for when contract is completed. Let's understand first rule for transfer of profit. In case of profit or loss in contract account, the entire amount of profit or loss will be transferred to profit and loss account. Let's understand illustration. You are provided information for contract X of contractor Y for the year ending 31st March 2024 and asked to pass necessary journal entries and prepare contract account and ascertain amount to be transferred to costing profit and loss account. Information given is materials directly purchased rupees 12,000, materials supplied from stores rupees 5,000, direct wages rupees 22,000, direct expenses related to contract X rupees 3,000, architect fees rupees 5,000, overhead charges rupees 8,000. Plant and machinery sent on contract on 1st April 2023, opening balance rupees 20,000, excess materials returned to store rupees 2,400 and contract price rupees 80,000. Note that outstanding wages rupees 800, 10% depreciation is to be charged on plant and machinery. Let's prepare solution. For solution, we'll prepare 5 columns. First one for serial number, second one for particulars, third one is for ledger folio number, fourth one for debit rupees and fifth one is for credit rupees. First item is for direct materials purchased. The journal entry is contract account debit to bank account by rupees 12,000. Second journal entry is for materials supplied from stores. It is contract account debit rupees 5,000 to stores control account rupees 5,000. Third, for direct wages paid, contract account debit rupees 22,000 to bank account rupees 22,000. Fourth entry will be direct expense paid related to contract X, which is contract account debit rupees 3,000 to bank account rupees 3,000. Next is for payment of architect fees. It is direct expense. An entry is contract account debit rupees 5,000 to bank account rupees 5,000. 6. For allocation of overheads, contract account debit rupees 8,000 to overheads account rupees 8,000. It is not the payment of overhead, but it is allocation of overhead. Next entry is for plant and machinery sent on contract. Entry is contract account debit to plant and machinery account by rupees 20,000. Next entry is for materials returned to store. It is store's control account debit rupees 2,400 to contract account 2,400. Next entry for outstanding wages, contract account debit rupees 800 to outstanding wages account rupees 800. Next is for plant returned back to store to be recorded after depreciation. Plant and machinery account debit rupees 18,000 to contract account rupees 18,000. So 20,000 into 10%, which is equal to rupees 2,000, that is the amount of depreciation. Thus 20,000 less rupees 2,000, which is equivalent to 18,000 rupees, is the closing balance which is to be shown, that is written down value. Next entry is for contract price becoming due on completion of contract. Entry is contractee account debit by rupees 80,000 to contract X account rupees 80,000. Last entry is for profit or loss on the contract X. Here it is profit. So the entry is contract account debit rupees 24,600 to profit and loss account rupees 24,600. And the total of debit side is rupees 2,800,000 and of credit side also rupees 2,800,000. Now let's prepare contract X account based on the journal entries that we have passed. So contract account for the year ending on 31st March 2024 in the books of Mr. Y. You all know the format of account. Debit and credit will write particulars amount rupees, particulars amount rupees. On credit side, we have 3 entries, that is by stores control account rupees 2,400, by plant and machinery account rupees 18,000 and by contractee account rupees 80,000. And on debit side, we have first entry to bank account rupees 12,000, to stores ledger control account rupees 5,000, to bank account for wages paid 22,000 plus outstanding 800, giving figure of rupees 22,800 in outer column, to bank account for direct expense rupees 3,000, to bank account for architect fee rupees 5,000, to overheads account rupees 8,000, to plant and machinery account rupees 20,000, and the profit of this account is transferred to profit and loss account. Amount is rupees 24,600. Total of debit and credit side is rupees 1,04,000. I hope The journal entries and how to prepare an account when the contract is completed is clear. Now, let's understand when contract is uncompleted. Certain contracts may have not been completed at the end of the same accounting year, and the whole profit shown by the contract account cannot be credited to profit and loss account. As such, contracts are uncompleted, provisions has to be made against contingencies such as rise in price of materials, increase in labor cost or any other relevant cost. On other hand, it is not desirable even to ignore completely the profit on incomplete contracts. Otherwise, the year in which the contract is completed would show abnormally high profit, and reverse may be the case in the year in which the contract remained incomplete. There are three possible situations in any of them may take place. Number 1, when less than 25% work is complete and accounting year is ended. Number 2, when contract work is completed at reasonable level and accounting year is ended. And number 3, when significant work is completed and accounting year is ended. Let's understand first situation. Kindly refer part 2 to revise accounting treatments for the stated situation. Now, let's understand the case of uncompleted work through illustration. Illustration number 2. It is for when significant work is completed, that is less than 25% of contract price, or when the contract has just commenced. Let's understand first rules for profit transfer. In case of profit in contract, the entire amount of profit will be transferred to work in progress account as contingency, and in case of loss, the entire loss will be transferred to profit and loss account. Illustration number 2, let's understand it. On 1st January 2024, our company limited has commenced contract number 777, for which contract price is agreed at rupees 40 lakhs. Accounting data pertaining to this is provided. Accounting year is ended on 31st March 2024. Information given is cash received from contractee being 80% of work certified rupees 6 lakh, wages paid rupees 3 lakh, material supplied rupees 3 lakh, other expenses rupees 60,000, plant supplied on 1st January 2024 rupees 4 lakh, uncertified work 22,000, material unused on site rupees 16,000, wages due but not paid rupees 12,000, subcontract rupees 15,000. Provide 10% depreciation of plant. Uncertified work is overdue by 10%. Prepare contract number 777 and work in progress account in the books of our company limited. Let's prepare the solution. This is uncompleted contract, thus work in progress account will be prepared. Generally, work in progress account is comprising of certified work, uncertified work, unused materials lying at the site and closing balance of plant. Certified work is not provided, but 80% of cash certified is given. Therefore, certified work is equal to cash received into 100 divided by 80, which is equal to rupees 6 lakh into 100 divided by 80, which is equal to rupees 7 lakh 50,000, which is amount of work certified. Uncertified work is overvalued by 10%. It should be brought down to 100%. Cost price of uncertified work is equal to uncertified work into 100 divided by 110, which is equal to 22,000 into 100 divided by 110, which will give us amount as rupees 20,000, which is our cost of uncertified work. Closing balance of plant we need to calculate written down value, which is equal to value of plant into 3 divided by 12 into 10 divided by 100, which is equal to rupees 4 lakh into 3 divided by 12 into 10 divided by 100, which will give us amount rupees 10,000, which is our depreciation. Therefore, closing value of plant equal to opening value less depreciation, which is equal to rupees 4 lakh less 10,000, giving value of rupees 3 lakh 90,000 as the closing balance, which is our written down value of plant on 31st March 2024. Since insignificant work is completed, thus the entire amount of profit will be transferred to work in progress account as a contingency. Let's prepare contract 777 account for the year ending on 31st March 2024 in the books of our company limited. You know the format of account. We'll write on debit and credit side particulars amount rupees. As you know that it is work uncompleted, therefore on credit side we have only one entry, that is of work in progress. So on credit side one entry by work in progress account. Here we will record certified work rupees 7,50,000, uncertified work rupees 20,000, plant rupees 3,90,000 and material on site rupees 16,000, making total of work in progress account as rupees 11,76,000. On debit side, first entry is to stores control account rupees 3 lakh, to bank account paid rupees 3 lakh plus outstanding wages 12,000, giving total in outer column rupees 3,12,000, to bank account other expenses paid rupees 60,000, next to plant account rupees 4 lakh, next to bank account for subcontract amount rupees 15,000, as our total of credit side is greater than debit side. So, there is profit of rupees 89,000, which will transfer to work in progress account. So, last entry is to work in progress account profit by rupees 89,000. As it is work uncompleted contract, we will prepare work in progress account for the year ending 31st March 2024 in the books of our company limited. On debit side, on 31st March 2024 by contract 777 account, work certified rupees 7,50,000, work uncertified rupees 20,000, plant rupees 3,90,000, materials on site rupees 16,000, making total of 11,76,000. This 11,76,000 is from the credit side of our contract account, and on credit side of work in progress account on 31st March 2024, our first entry is by contract 777 account rupees 89,000, and making balance of work in progress account at the end is rupees 10,87,000. As it is work in progress account, it is always having debit balance. So, here also our debit balance is rupees 10,87,000, which we will brought forward to next year on 1st April 2024 as to balance brought down rupees 11,76,000. Here, work is not completed at the end of the accounting year. Thus, work in progress account is opened and has closing balance as on 31st March 2024 is rupees 11,76,000 less contingency profit rupees 89,000, which is equal to 10,87,000, would become the opening balance of contract account on 1st April 2024. This would appear on the debit side of contract account for next year. Rupees 10,87,000 would appear in the balance sheet of 31st March 2024 at asset side. No share of profit of contract number 777 will be transferred to profit and loss account because no significant work is completed. Now, we will study second situation of uncompleted work with illustration. When contract is completed at reasonable level and accounting year is ended. Rules for profit transfer. In case of profit in contract account, the share of profit will be transferred by applying formula. Profit to be transferred to profit and loss account is equal to contract profit into 2/3 into cash received divided by work certified, and from total profit this share of profit will be deducted and remaining amount of total profit will be transferred to work in progress account for contingency. And in case of loss, the entire amount of loss will be transferred to profit and loss account. Let's understand illustration 3. A building contractor having undertaken a construction work at a contract price of rupees 50 lakhs began the execution of work on 1st April 2023. Information given is machinery installed at site rupees 3 lakh, materials on site rupees 17 lakh, labor at site rupees 15 lakh, direct expenses rupees 60,000, overhead allocated rupees 80,000, work certified by architecture rupees 39 lakh, cash received rupees 36 lakh, cost of work not yet certified rupees 90,000, materials on hand on 31st March 2024 rupees 30,000, wages accrued on 31st March 2024 rupees 50,000, value of machinery on 31st March 24 rupees 2,20,000, material returned to store rupees 25,000, material transferred from contract Z rupees 14,000, material transferred to contract Q rupees 16,000. You are required that 2/3 of the profit of contract on the basis of cash received is to be transferred to profit and loss account. Prepare number 1 contract account, number 2 work in progress account, and number 3 amount to be disclosed in annual account. Let's prepare solution. Let's prepare contract account for the year ending on 31st March 2024. Let's have a look at first entry on debit side. To machinery account rupees 3 lakhs, to stores control account rupees 17 lakh, to bank account for wages paid rupees 15 lakh plus accrued wages rupees 50,000, giving outer column total as rupees 15 lakh 50,000. To bank account direct expenses rupees 60,000, to overhead account allocated amount rupees 80,000, to contract Z account rupees 14,000. And on credit side, by stores control account rupees 25,000, by contract Q account rupees 16,000, by work in progress account, here we will write amount of work certified rupees 39 lakh, work not certified rupees 90,000, materials on hand rupees 30,000, machinery rupees 2,20,000, making total of work in progress as rupees 42,40,000. And as total of our credit side is greater than debit side, we will have amount of profit, and the profit is 5,77,000. Profit to be transferred to profit and loss account is rupees 3,55,077, and to be transferred to work in progress account is rupees 2,21,923. Now let's understand this calculation of profit to be transferred to profit and loss account. Profit to be transferred to profit and loss account is equal to contract profit into 2/3 into cash received divided by work certified. Contract price is 5,77,000 into 2 divided by 3 into 36 lakh divided by 39 lakh, and amount comes to rupees 3,55,077. It means that the remaining amount of rupees 2,21,923, that is 5,77,000 less 3,55,077 will be transferred to work in progress account. Now let's have a look on work in progress account. So let's prepare work in progress account for the year ending on 31st March 2024. On debit side, on 31st March 2024, by contract account, we will first write work certified rupees 39 lakh, work uncertified rupees 90,000, plant rupees 2,20,000, materials on site rupees 30,000, making total rupees 42,40,000. And on credit side, on 31st March 2024, by contract 777 account rupees 2,21,923 and closing balance on 31st March 2024 amount is rupees 40,18,077, which we will brought forward to next year on 1st April 2024 as to balance brought down rupees 40,18,077. Let's understand the disclosure in annual account. First, rupees 3,55,077 will be credited to profit and loss account of the year ending on 31st March 2024, and the disclosure in balance sheet as assets and liabilities. On asset side, work in progress account 42,40,000 less contingency 2,21,923, giving amount of rupees 40,18,077. From this, less cash received from contractee rupees 36 lakh and making total in outer column as rupees 4,18,077. And on liability side, we will write wages accrued, which are our outstanding wages, amount rupees 50,000. Let's understand this illustration. So far, the work of rupees 42,40,000 is completed. Rupees 2,21,923 are kept as contingency for remaining work. This reserve is kept for price rise in any component of the total cost like material, labor or any other expense in future. Total investment of contractor in work in progress is not rupees 42,40,000, but it is rupees 4,18,077 because in it the profit of rupees 2,21,923 is included and rupees 36 lakh are received from the contractee for completed work. Let's conclude the session. Number 1. The core element of this module was transfer of profit or loss to profit and loss account. Number 2. We have studied that profit or loss on completed contract is always transferred to profit and loss account. Number 3. When contract work is completed less than 25% of contract price, in such case no profit is transferred to profit and loss account, but entire profit is kept as reserve in the form of contingency and said amount is transferred to work in progress account. But in case of loss, the entire loss is transferred to profit and loss account. Fourth, when work is completed at significant level, profit is transferred to profit and loss account on 2/3 work and cash received and work certified. This computation is done with the formula. The formula is profit to be transferred to profit and loss account is equal to contract price into 2/3 into cash received divided by work certified, and remaining amount of profit is retained as reserve in work in progress account. In part 4, we will study number 1, when work is almost on completion stage and accounting year is ended. Number 2, when data is provided for more than one contract. Number 3, we will discuss about escalation clause. Number 4, preparation of annual accounts of alongside contract. We will meet for next part 4. I hope you have understood this part very clearly. Thank you.